For years ago, slogans like Make in India, Vocal for Local, Invest in India, and De-risking were widely heard across the country, signaling a movement against China. However, India is now allowing Chinese investments in electronics manufacturing. In 2020, after 20 Indian soldiers lost their lives in border clashes with China, Modi's government imposed strict policies limiting Chinese products and investments, including banning over 100 Chinese apps. Despite the ongoing border standoff, India's resolve to reduce imports is weakening. The country remains hesitant to break ties with China, and New Delhi is opening its doors to Chinese investors again. According to Indian media, there is pressure from the electronics manufacturing industry to approve Chinese investments. An interministerial panel has approved 5 to 6 investment proposals in the electronics manufacturing sector, including some bold entries from Chinese companies looking to shake things up. One of these companies is Luxshare, a Chinese firm that manufactures electronic components and serves as a key supplier to Apple. Luxshare assembles products like the iPhone, AirPods, and Vision Pro. In 2023, Apple produced all models of the iPhone 15 in India and plans to manufacture its high-end iPhone 16 Pro and Pro Max models there as well. Manufacturing in India has cut Apple's production costs by 10%. The second company is Micromax, an Indian firm that once dominated the Indian smartphone market. Now, Micromax's parent company is planning a joint venture with Chinese electronics manufacturer Huaqin Technology. In this partnership, Huaqin will hold a minority stake, while Micromax's parent company will retain majority ownership. By May, India had approved over 100 foreign direct investment proposals, with the majority coming from China. According to the Commerce and Industry Ministry, from April 2000 to December 2021, China ranked 20th in terms of FDI equity inflows into India, with a modest share of 0.43% or $2.45 billion. New Delhi has also eased visa policies for Chinese workers in November last year. Imports from China are also rising once more. In 2023, India imported goods from China worth over $122 billion, with a significant portion of this comprising electrical and electronic equipment, valued at approximately $40.8 billion. So India cannot hurt China without hurting itself. As of 2023, 59 Chinese organizations have been banned, and numerous projects have been put on hold or contracts scrapped. Additionally, goods from China have accumulated at Indian ports, awaiting clearance due to these regulatory and logistical hurdles. As a result of escalating tensions with China over the past 4 years, Indian electronics manufacturers have faced severe challenges. The sector has suffered $15 billion in production losses and experienced around 100,000 job cuts. In 2023, the share of manufacturing in India's GDP declined from 16% in 2015 to approximately 13%. This figure falls short of the Modi government's target of increasing the manufacturing sector's contribution to 25% of GDP. Originally set for 2022, this goal has been postponed 3 times, with the new target now set for 2025. Chinese companies are the biggest investors in Indian startups. Ant Financial, the fintech arm of Alibaba Group, is a major Chinese investor in India, with nearly $2.7 billion invested across 7 companies, including significant stakes in Paytm and Snapdeal. Tencent, another major Chinese investor, has heavily invested in Indian startups, including unicorns like Flipkart, Swiggy, and Ola. With close to $2 billion in investments across around 15 startups, Tencent supports growth-stage companies such as Katabook, MyGate, and Nio Solutions, and is actively exploring new investment opportunities in the range of $10 to $15 million. China is also a big part of the Indian smartphone market. According to Counterpoint Research, Xiaomi, Oppo, Vivo, and Realme collectively held 58% of India's smartphone market as of March 2024. In addition to India's market, China holds a 2.2% share in India's auto components sector and a significant 19.4% share in India's electrical machinery sector. The border situation between India and China remains unstable, with China having deployed approximately 200,000 troops along the border and India positioning 10,000 troops in response. Despite these tensions, the Indian government is cautiously reopening to Chinese investments, implementing safeguards. This strategic shift aims to boost local value addition and advance India's goal of self-sufficiency in electronics manufacturing.